Good afternoon to all of you. Hope you had a good lunch. And it's not easy to listen to talks just after lunch. We'll try to make it as interesting as possible. We have really a galaxy of panelists, and I am given the task of being the moderator. And I must say that I am deputizing for Badri Narayan, who was supposed to be the moderator. And he had some urgent engagement in the court, so he swapped. And then I am deputizing for my son. I hope you don't mind. The topic is of great interest. Ease of doing business in the digital economy. When we talk about digital economy and how India is progressing by leaps and bounds, we always know that the technology development is going at a pace where the legislation is not able to keep pace. It is a blessing and probably a curse. Whoever thought a company which did not own a single car will run the largest taxi company in the world? The revolution of e-payment systems, which India has advanced, we have overtaken many people. We have leapfrogged in this technology. Thanks to the IT agreement which we signed a long time back as part of the WTO, India has actually reaped the benefit of the full IT agreements. While we are talking about the growth of the digital economy, whether it is e-commerce or fintech or agri-tech or your media and entertainment, we always have what is known as a taxing issues. The taxing issues in this sphere is much more complicated than in the real world. In respect of goods and services, you can actually see them physically. Goods, of course, services we can perceive. Whereas for the digital economy is concerned, we have a lot more challenges, and the taxman finds it difficult to tax this particular sector or a segment, understandably. If you look at the way in which tax system has evolved, I'm not talking about the direct taxes, I'm indirect taxes. The taxation has always been comfortable when there is a B2B transaction. When there is B2C transaction, even in the earlier time when there is a retail sale taking place, we had other complications with regard to how to arrive at the wholesale price and all those things. But when you talk about digital economy, we are talking a different segment whatsoever. Before coming into the GST issues, I just wanted to flag one issue which is being discussed in the WTO with regard to the import of digital products within quotes. As of now, if we import any movie or any software digitally into your system, there is no custom duty payable. Service tax is payable or GST is payable. custom duty is not payable because customs is dealing with import of goods. Digital goods, a movie which is being imported, if it is coming in the form of a cassette or a DVD, it will attract because it is passing through the customs barriers. But when the movie is being imported within quotes in your system, it is not passing through the customs. Custom barriers are not there. And then these goods do not attract custom duty because as early as 90s, there is a resolution passed by the WTO chairman that we will continue not to charge custom duty on the digital goods. And we are continuing. In fact, last time also it was extended by 2 more years. But the governments are thinking, can we not charge custom duty on the digital goods? Why should we not charge it? When an email has got an attachment, email per se is a communication. The attachment is goods. Not seen, but can be. What about levying custom duty on this? India is actually discussing this issue. Some countries like Malaysia, they already started also charging. That means an individual as importer in your home, if the custom duties are charged, you will have to pay custom duty. How will you collect is a different matter. And what the existing Customs Act, will it ever cover those type of transactions? Where do you file a bill of entry? Who will examine the goods? Who will get out of charge? And who will pay the custom duty and then clear it? The existing laws will not accommodate this type of transactions. Therefore, the law has to be amended to take care of those things, if they want to do. And comes the direct taxes. How do we charge income tax on the income derived from the digital economy? Is engaging the attention of the government. They are also trying to charge Section 9 and various provisions, including the tax reduction at source, royalty payment. So many items are trying to be brought in so that we can collect the tax on this. And the whole world is also grappling with the problem of how to collect the tax, called Google tax, we can talk about. That is another issue which is going on the direct taxes side. Last but not least, our GST. The GST, when it is going to charge the GST charges or the taxes on this digital transaction, it has got its own problems. And the problems are multiplied when the seller or the supplier is outside India and the recipient is in India. If it is a B2B transaction, the businessman can ask to pay reverse charge. But if it is a B2C transaction and OIDR, I suppose you will be facing a lot of difficulties in identifying the suppliers and identifying the end customers. And we have put the onus of paying the GST on the suppliers. A person sitting in California who is having a digital market in India, if the customers are individual customers and the OIDR scheme, then the person in California is supposed to take a registration in India, GST registration, and pay taxes here. That's the law. Whether people are able to follow it, what they are doing, and in fact, in India, GST department has designated Bangalore Commissionerate as the commissionerate responsible for collection of these tax and OIDR on the import of these services, digital products outside India. It has got its own ramifications, difficulties, subject in jurisdictions, imposition of penalty, how do you recover the amount? Problems are many. I don't want to take more time as a moderator. I am supposed to ask questions. For the first time, I am now doing a job which I am normally used to answering questions from the judges. Searching questions, difficult questions, not giving even a second to think, you must answer immediately. That's what I've been doing all along. For the first time, I am now given the pleasant job of asking questions. So nice. Thank you, sir. Mr. Mohapatra, I think I will address the question first to you because I am very fond of direct taxes, though I deal more of the indirect taxes also, if you don't mind. The topic today is not merely digital economy taxation. Ease of doing business and this. I think there are two different poles apart. How do you, sir, avoid conflicts, litigations, and ease of so-called collection of tax, of direct taxes in the digital economy, especially in the case of trans-border transactions? Please.
So, I am expanding your question to include both the domestic and the cross-border transactions.
No problem.
And like the present days will show that the nature and the contours of the business and how business is being done has changed considerably, and it is now almost unrecognizable than what it was some 5 or 7 years back. We could not have imagined people making money out of activities which we never heard of before. Social media influencer, YouTubers, a climate activist, somebody who does reading of your DNA. These are the kinds of activities which are now yielding income and receipts and which are said to be taxed. In the cross-border field, we have seen major jurisprudence evolving on the two traditional aspects on the issue of business connection and on the issue of permanent establishment. Have tried to keep pace with the changed circumstances and the changing face of the technology. In jurisdiction other than in India, we have seen permanent establishment being interpreted in a manner which should make us surprised and startled at the same instance. In one case, we have the server and the digital infrastructure for beaming movies to a particular jurisdiction was held to be sufficient to indicate the permanent establishment. And so it was taxed, or so the tax was settled in that manner. At this point in time, what I believe is that there are many ways in which business transactions are getting conducted. And we have seen multifarious legislations acting both on the fiscal front and on the other areas of operation. So we have seen the virtual digital asset and the evolution of the virtual digital asset into a domestic economy. Now, since 2013, we would have seen RBI grappling with the virtual digital currency and how it is to be regulated or banned or prohibited in whatever manner. Virtual digital currency, with the RBI's concern of losing its monetary sovereignty because of advent of this virtual currency, those are real and pressing. But at this point in time, while we have the regulations in place, both in the direct tax and also in the PMLA legislation as also in the Companies Act, we have many regulators looking at the regulation aspect of this area. But we don't have as yet a competent authority to administer the regime, the virtual currency regime. With the G20 last year in September 23, and India being a signatory to the G20 announcements, the resolution saying that we are to go by and abide by the FSB's recommendations on the virtual currency, that also will now encourage us to be moving forward to look at, explore, and put in place some kind of legislation around the virtual currency also. So in my view, while legislations are there to help and facilitate the running of the businesses, the overlapping nature of the legislations and the gaps in between the legislations, which are capitalized to some extent by the unscrupulous and the greedy, those are the areas in which we must have to keep a very watchful eye on. I believe that technology has changed businesses in a manner which was unthinkable some years back. Legislation has tried to come to grips with the changing contours of the business and how it is being played out on the field. But it will take some more time and some more years before we find a level of satisfaction at the legislations being administered right now.
Thank you, sir. Sir, my friend Mr. Gupta. He is wearing a cap of a difficult job, trying to balance the tax collection at the same time, not hurting the economy too much. His job is very delicate. He should not allow leakages. At the same time, he should not unnecessarily throttle the business which is doing genuine. Very delicate job, a difficult job. And I'm happy, sir, I'm sitting next to you. Normally I sit across to you or across to your officers. The rare opportunity to sit next to you and then ask some interesting questions. I am not going to embarrass you with regard to the ongoing case which is going on in the Supreme Court with regard to the valuation of the online gaming. It matters sub judice. I can have my opinion, you can have an opinion, but it is better not discussed in this forum. It is left to the court number 1, the Chief Justice Court. I think the matter is already on the list. Hopefully after the Navaratri vacations, it may be taken up, hopefully. We just finished the argument on the canon judgment on DRA jurisdiction. Judgment is reserved, so now we'll wait for the next one. Sir, as an administrator of this vast economy, especially with regard to the tax evasion cases, your officers and your office have done a tremendous job in catching hold of all those fake invoices, fake companies, which are causing maximum damage to the economy. I salute you on behalf of everybody here for doing a great job and continuing to do the great job. If a tax dodger is not caught, the other taxpayer is paying more on his behalf. So therefore, it is necessary to catch them. You must have stricter laws to punish them and exemplary punishment to be given so that others do not do that. I am with you. Sir, when you are dealing with genuine manufacturers, suppliers of goods and services of repute, when there is a difference of opinion with regard to the interpretation issues, should the department look at it from a different angle rather than the angle in which you look at a person with suspicion, especially when there are doubts, gray areas, and all those things. Do you want to comment? I want you to comment as to what should be the attitude or the approach of the investigation wing with regard to the genuine manufacturers who have no intention of evasion, but they make some errors, let us say. How do you deal with them? Should there be different norms for that type of genuine manufacturers, or they'll be treated in the same way as others are being taught? What should be your approach on this, sir?
Good afternoon. Good afternoon, everyone. Thanks a lot for a very long question. In fact, many answers you have already given in that long question itself. So, thanks for making my job very simple and easy. As you have rightly said, that our job, CBIC or DGI, is to ensure compliance of law. As you know, GST over the last 7 years evolved. It's still evolving law. A lot of issues come up, and as you rightly pointed out, many of in this new era economies like digital economy, fintech, agri-tech, a lot of other NFTs, PSLCs, carbon credits. These are areas where even the taxpayers are not aware whether their transaction is taxable or not. And even if they are aware it is taxable, how it is taxable, how they are to comply with the law. So it's a big challenge. And similarly for any investigating agency, it's equally difficult challenge, because these are difficult transactions to trace, not easy to find, and similarly these are difficult to investigate and finally convince. But our approach during the last 1 year or so, I can say with some degree of certainty that we have been making conscious efforts to differentiate the two kinds of, if we call them tax evaders or tax avoiders or whatever may you call. One is, as you rightly pointed out, there are people who dodge or play with the tax system, like fake ITC or clandestine removal. Our approach of investigation is certainly different for those kinds of cases. There is no leniency. We are very harsh, and we want to catch the masterminds, put them behind bars, and we have been doing a lot of work in that respect, which is already in public domain. So I need not say. And the second is, as you rightly said, there is taxpayers who are doing genuine business, they're helping the economy, they're building India, and sometimes certain issues comes which a tax collector or a tax enforcer like us feels that it is liable to tax, you're supposed to pay tax on it, but the taxpayer feels that it's not taxable, or he has a different interpretation, or he was led to a different interpretation. So he says those issues keep, and a lot of issues in the last 1 year, whether you talk of foreign airlines issue, whether you talk of foreign shipping lines issue, whether you talk of Infosys, whether you talk of any other IT issues, and a lot of secondment issues. A lot of such issues have come in picture during the last 1 year, which have mega impact, industry-wide impact. And our approach in those issues have been that let me tell you that we were the first agency in the country who have come out with guidelines. You are talking of ease of doing business. We are talking of ease of doing investigation, both for the genuine taxpayers, that the investigation should be such it's easy for him to comply, or come forward to cooperate in the investigation. And similarly, it's easy for us to convince those people. So we came out with, after a lot of deliberations, with the guidelines which are in public domain. I think everyone is aware about investigation guidelines of 8th February, which were subsequently followed up by CBIC also. They also issued similar guidelines for the zones, CGST zones on 30th of March. And I believe other investigation agencies are also issuing similar sort of a guidelines where we are very transparent, clear in our approach, how to go about in such cases. And let me tell you also that in most of the cases, now we are also engaging the GST Council and the board, both the CBIC, GST policy wing or the TRU, on various interpretation issues where we feel because the law as on date, a particular transaction or supply is taxable, but industry by and large feels no, they have not been paying tax, liabilities are huge, so they feel it's not taxable, but law is not clear to make them not taxable. So we are flagging those issues to the right form of GST, because in GST, as you all know, it is final authorities with the GST Council only, where both center and states come together and decide on a particular matter, whether it's taxable or not. So if you see the last two GST Councils of 53rd or 54th, it is flooded with the issues which we raised and have investigated during the last 1 or 2 years. And on some of the issues, clarifications have come, or if the government feels, okay, fine, even if it was taxable as per the existing law, but in the broader picture, keeping in view international practices or India's position, we want to exempt that. They have come out with exemptions also. We have seen in some of the sectors, like foreign airlines, they have recently exempted. Even in case of insurance sector, co-insurance or reinsurance, they have exempted. So we have been very transparent, and we have been fairly treating very differently the genuine taxpayers, the manufacturers or service providers, and our approach has been engaging with the taxpayers also. This is very different. You may not be finding that the earlier investigating agencies were engaging with the taxpayers. We are very open to meeting any association. A lot of associations have met, whether it's of airlines, whether it's of shipping lines, whether it's IT, NASCOM, you talk of any number of issues we have raised. We have been engaging with the associations. We have been telling them our point of view. We have been hearing them. And we are trying to reach at a consensus that, okay, fine, as per the interpretation of the law, this is taxable. And if you say it's not, then you have to go and approach to get some relief from the right form, which is not us. So with these words, I think I end here.
Oh, thank you. Sir, I think I am taking a clue from your answer, sir. You mentioned about the recent investigations and judgments given with the courts with regard to their shipping and also for the secondment and all those things. I just wanted to brainstorm. I think a forum like this is where I think you can debate. There is a typical case of a secondment, whether the secondment charges which were incurred there, etc., is includable or not, etc., is a question which has been raised and ultimately the Supreme Court decided it's not. I am asking a question to myself. This entire thing is revenue neutral. If the amount is included and then pay the tax, on reverse charge you can always take the credit. I am talking about 99% of the industries. If ultimately, if it is going to be revenue neutral, is it worth the department for them to go ahead and then fight and then ask for the interest and etc., etc.? Should we not have a policy, especially in the GST, where the downstream products can get the credit or B2B transaction can take the credit? Should there be tooth comb way of looking at it and then say, in this stage you have not paid the tax here, you pay the tax along with the interest. Whether the other person can take the credit or not, irrelevant, therefore go ahead. Should we not have, in the interest of ease of doing business, think of squaring up those cases and then say, hey, from tomorrow you pay the taxes accordingly for the past, because other person can take the credit, etc. I am not demanding from you, nor for the fellow taking the credit. Is it not better to deal with those cases where mass number of cases can be disposed of in this particular manner? What is your thinking on this, sir? Out of syllabus, sir.
No, it's not out of syllabus. It's very much in the syllabus. I'll answer your all questions. So let me take you back. When we brought GST, what was our main motto? Our main motto was that there should be a seamless flow of ITC, minimum exemptions, and it should be a simple, and we absorbed so stories long. So end result is that we wanted a seamless ITC flow and minimum exemptions. Now, revenue neutrality cannot be a concept in GST, I tell you. Everything is revenue neutral. You pay, the second person takes credit. Second person pays, the third person. So in that process, we should not have brought GST. We should have taxed the final consumers. Once you have brought GST, you mean you want to engage everybody in the tax change. You want the tax credit to be seamless. The next person you pay on value addition. So that is the fundamental concept on. So in the taxation, revenue neutrality cannot work. Everything is revenue neutral. Wherever you pay tax, somebody else will take credit if it's a B2B transaction. It is only B2C that your taxation chain ends. So in that way, if you talk that on the basis of revenue neutrality, we should be giving exemptions, I have a different opinion on that. And regarding your second question which you asked, wherever the government is finding, recently also in 53rd or 54th GST Council, for the earlier years, 2017, 18, 19 or 19, 20, the government has given the relief that if you have paid your tax up to a particular date, then you are entitled ITC, and penalty and interest has also been waived, because the government realized that during those initial 3 years there were difficulties, some interpretation issue may be there, some compliance issue may be there, so they have given the relief. But revenue neutrality as a concept cannot be, in fact I would urge that whatever cases, whether it's of insurance or foreign airlines or foreign shipping lines, all these cases may appear to be revenue neutral. But all these are big operators. Now once we have brought GST, then they should try to fall in line and comply with the law of the land. In some transactions may be internationally not taxable, I agree. But then the government has to take a call whether to tax those transactions as per our law or not. But if the bigger companies cannot comply law, then what to talk of the small taxpayers who will comply? Because if every transaction, wherever, whether you are paying on airlines or shipping lines or IT company, you are getting credit. Nobody is denying the credit. Now your question is for the past you are not entitled credit. But I am saying this law was clear. It was not like that so vague that our big consultants, our big advocates, our large taxpayers could not understand it. So that is where I am.
I don't know, you are talking big advocates and big lawyers, I don't know, I'm looking for who are the people. I am looking somewhere.
I'm just
No, what I'm trying to say is this, sir. I must say my practical experience dealing with the subject matter is this. You are talking about big companies and advised by big advocates, all this, etc. You must realize there are a vast number of small and medium companies throughout India, both goods and services sector. And they do go to the local consultants asking for their advices. And while you say that the law is so clear, For me, it was not. If it was clear, nobody is going to start paying lower amount of taxes. Leave it at all. But based on the advices, the companies do pay what they think is right. And then comes the tax demand because of investigation or something. And look at the demand period. The demand period is 3 years from the date of final annual account, annual return. That got postponed because of various reasons. So today, effectively, if a normal period is 3 plus 3, 6 years or 7 years, and if a particular company, based on an opinion by whoever the local consultant, paid 12% tax instead of 18%, or paid 5% tax instead of 18%, and the turnover is about 100 crores as a small and medium company, and then his profit, if it is a 4 or 5 crores, if he is now slapped with the demand per year to the tune of about, say, 12 crores, multiplied by 6 times, 72 crores, equal amount of penalty, interest, etc. There's a sure death. I am only thinking, if there is a place for errors, and whether it's transaction of this nature, how to look at it. I am now discussing in a different manner. I am not asking you to give an answer. I am not finished the question, sir. The question is long. I want to know, when British left India in 1947, we had a legacy act called Central Excise and Salt Act 1944. Even today, that's the law for excise. The tax demand could be raised under STL Rule 10 for 3 months. And that was an enactment by a British against us, ruler versus ruled. If in that time, indirect taxes recovery is limited to 3 months, and today we are a welfare government, a welfare state, it's not ruler versus ruled. We, a democracy, we elect people and then they rule us. Should we not expect that in a situation of this nature, increasing the tax demand period from 3 months to whatever time now, to 6 years now basically, or 4 years plus 3 years, whatever it is, if it is going to result in sure death of many companies, it is going to happen. I'm seeing in my own eyes. And there is no way of defending it. No way. It's a fact. It's wrong. The opinion is wrong, is done wrongly. Correct. Now what happened to them? Are we not supposed to bring in a concept called doctrine of prospective overruling in some deserving cases? Should we not think that these companies are the people who are actually given the maximum employment, not the big companies? If we are going to throttle them because we are actually converting the indirect taxes to direct taxes, if we are going to collect the taxes from them for so many years, and there is no way they can collect from the customers or their buyers, that means we are now looking at a vast majority of people vulnerable, and those people who are creating employment and contributing to the economy will vanish. It is I'm actually saying this. What is the thinking process for the government? As far as this is concerned, today in the GST law, normal period increased to 4 years. You have decreased from 5 years to 4 years for the fraud and all those things, etc. Normal period is 4 years from the date of returns, etc. Sir, I'm telling you, it is going to cause tremendous amount of problems, already facing a problem, etc. I want to know, in the interest of economy, what are the thinking of the government? How do you intend to solve the problem of this? Genuine cases, no evasion. Everything is accounted for.
I fully appreciate your point of view on this issue, that in India we have in taxation very provided provisions of very long times for issuing demands and making recoveries, both in direct taxes or indirect taxes put together. Even from central excise days, we have normally there used to be 1 year period for normal demand, 5 years for extendable, but when GST law came, the normal period became 3 years or more, and then in case of suppression, etc., it continued of 5 years. But partially we have tried, government is concerned, government is seized of the matter, government is very much concerned, government doesn't want the industry to die because of the taxation issue, very much concerned. In fact, this issue was deliberated in the last GST Council meeting also. And I think perhaps because of the demand of the industry only, this distinction between the normal period demand and the extended period demand has been merged together, and we are coming with a new section of 74A, which was there. Of course, there is checks and balance. In case of normal period, it has slightly raised the period.
Slightly?
By 1 year.
Slightly? 4 years. 3 to 4, no?
1 year, 25% there is, but in the extended period they have reduced. But one more thing, if I recall correctly, now they have allowed that in case you pay tax, you can claim ITC, which was not there, which was the main pain point. Because earlier, because of the limitation of time, you could not claim ITC if you have paid, you're convinced and you feel, okay, by mistake we have not done it, we can pay it. Because most of the companies earlier, because of the bar on entitlement of ITC, were not really coming forward to pay. So that clause has been, I think, introduced, was approved in the last GST Council.
Yeah, you're right.
It would partially solve the problem in the sense, but of course, there should be debate and there should be deliberations whether we really need such long periods of demands of 3 to 4 years. I fully agree that it becomes, because tax interest becomes more painful than the principal itself. And the government interest is not liberal in the sense they are really painful interests. Thank you.
Thank you, sir. Kshitij, and I trouble you. You are a man of games, no? And you play games and then ask people to play games, and then you invest in that. Nothing wrong. I mean, good.
I personally prefer playing sports, but please go ahead. Yeah.
Sure. Now, I am asking, with the weird and complicated taxation laws, when you are talking about investing in digital economy, when you are making investment decisions to invest in these types of economy, you are a great investor here. I want you to ask you, whenever you look at the complexity of taxation in India vis-a-vis other countries, do you hesitate to come for investment in India because of the taxation policy? Is it retarding you? Is it discouraging you? What exactly the position as far as India is concerned?
So thank you for that question, and hi everyone. Let me give you the perspective of a global investor in India, how they think of it, right? Global investors in general, they scan the globe, they look at various countries, and they assess, I think there are three important metrics that they look at. One is political stability, which is fairly obvious. The second one is ease of doing business, right, in that particular country, how easy it is to do business, etc. And the third one is predictability, right? So is this stable, predictable, or is it going to be up and down? One day you make this law, second day you make a completely different law, etc. I think these are the three most important factors. The fourth one is perhaps valuation, but it literally comes fourth after these three things. And I think on that front, frankly, over the last 10 years, India has done an amazing job. Mm-hmm. Right? So today where we stand is perhaps India is perhaps a top 3 investment destination globally. And with the right actions, it could even get to number 1. Right? So I think kudos to, frankly, the government for taking, the policymakers have taken the right calls here. Many examples of that. I think the Honorable FM last budget made some announcements about really sort of decriminalizing a lot of these actions which is many steps in the right direction. Personally, as an investor in healthcare, right, and on the pharma side of things, we've seen this production-linked incentives, PLI schemes for API, which is going to go a huge way in de-risking, the dependence on China as a source for pharmaceuticals. So a lot of these future-thinking policies have gone in the right way, but at the same time, it's almost become a tradition where we take 2 steps forward and 1 step behind, right? So that has happened on many occasions as well. So look, long story short, ease of doing business is extremely important. I would say GST, from a taxation perspective, GST is actually a huge step in the right direction, because it definitely uncomplicates a lot of things, right? GST led to a lot of different taxation ultimately folding into one, which helps a lot. Now everything is not perfect, right? There are issues, there are ways to better everything. So in that journey of becoming a much better or a perfect GST system, we have traversed, but have some distance to go. And there are many issues, things you've raised a lot of them already, so I won't sort of repeat them, that can be resolved with, and I think we have the right leadership in place to resolve those. The pace of it which becomes important, right? I think some of these issues, when left unaddressed, leads to uncertainty. Uncertainty certainly leads to no investment, right? So you will have many industries that have a lot of promise. If I think of India, right, the 2 industries that I think really have taken off over the last 20 years, that have led to great exports from this country, have been IT services and pharmaceuticals. Huge exports, India is seen as a hub for them. We have many other smaller industries today from an export perspective that have similar potential, right, without naming names. When there is indecision in those sectors, when there is a lack of clarity there, the issue isn't that, it's a 1-year delay, 2-year delay, and then we'll get back at it. The issue is that 2 years allows a different country to come up and take that leadership away from us. Right? And that is the key thing that, that needs to be addressed, saying that where we have the potential to be a global leader in an industry, I think we should almost be a lot faster in taking decisions in those particular sectors and provide full clarity there, right? The issue isn't more tax or less tax. I think even with more tax, it's a livable situation as long as there's clarity and there's no overhang, right? But that clarity is extremely important. Clarity, stability, predictability, those are the 3 things that are extremely important. Once that's achieved, I think the talent that India has, the depth of capital markets that India have, make it an extremely viable investment destination rather. And so then things will go in the right way. So those are my only comments on this.
Fantastic. Thank you very much, sir. I think you put it very nicely. There is no back and forth, predictable decisions, and you want quick decisions and clarity. I think that all these things go a long way for the investor to invest in big way. Thank you, sir. Amrendra, can you ask him?
Yes.
From your perspective, India has lived from 2017 to 2024 now, this GST. If I ask you to give you 3 reforms which you will suggest for making this GST little more user-friendly or assessee-friendly, what will you think of?
Certainly, sir. But before that, a little bit, the question which you have asked to Kshitij. So I belong to a company which is basically an European company, and we are present in more than 100 countries. We have been planning for a huge investment in India. Some has been done, but still we find it that, there are many, despite many reform, the road blockage still are there for any foreign investor. So that's one part I wanted to present it. The last 7 years experience in respect of GST, like anybody, everybody, it has become faceless. I mean, it has been, digital economy. GST return, invoicing, e-way bill, all systems have made the life quite easier. But if you ask, certain kind of reform, then one which it comes to my mind is you land up immediately into the uncertainty when there is a litigation. Because computer doesn't solve every problem. So I think a GST tribunal is long awaited, and it is almost 7 years of GST introduction. So how long this wait is going to be there? And second, which comes to my mind, because it is again digital, so sometime you require, individual interface also. So what it happens? One side is return claim is easy, but what's another side is if there are some mistakes, then your assessee credit is blocked. And you find it very difficult. So what is going to be the solution for it? Because that brings so much uncertainty into the business, that how long it is your GST number is going to be blocked, your invoicing and billing system is going to be blocked, and then your credit is being blocked, and how much you are going to be longer into the litigations. So these two things comes apparently into my mind, not the third one.
Thank you. I think
Thank you.
two is good enough. You have given two broad, very good suggestions. One is regarding the institution of the GST tribunal. Perhaps the government felt there will be no disputes in GST, and therefore there is no need for a tribunal.
So
Could have been.
I think the most senior panelists have answered so many questions, and I am sure he will have something.
Sure. In fact, that's what the Honorable Prime Minister said on the 30th June of 2017. He interpreted in his own way, the master in it. He didn't say it's a goods and services tax. It is a good and simple tax. Good tax definitely, simple is a question mark. And any case, now the tribunals are likely to come by at least before the end of this year, and then your prayers will be fulfilled in regard to the dispute resolution.
Thank you very much, sir.
Sir, my friend Radhe, Shyam, the name itself is so nice. Sir, I have, you have, like me, you were in the department and outside the department, so you have seen both sides of the table. I ask a very simple question. With regard to the interpretations and the delays in the court judgments to deliver, especially because these tribunals were not there, the assessee were rushing to the high courts. And the high court there takes a decision, they say, wait for the tribunal to come, they give some interim relief and all those things, etc. If I want you to ask you, if there is any prescription by which you think you can reduce the existing litigation and reduce the inflow of litigation into this in the judicial system to clog them, what will be your recommendation with regard to the tax laws? Not necessarily GST. It could be GST, it could be customs, it could be tax, direct taxes, etc. What would be your recommendation or suggestion to reduce the time of litigation? One thing, of course, abolish lawyers. Easily solved. Without any difficulty, the problem is solved. So apart from this, what exactly will be your recommendation or suggestion to reduce the litigation in India? Because that is one of the things which is troubling everybody. If it is going to take a long time to decide the matter, then it is also a disincentive for investment. Please.
Good afternoon, everybody. And let me just start with my gratitude to the organization who has brought me here. I think now. Now coming back to the question, I am very thankful to you that you have given me my very favorite topic.
Oh,
This topic has been very close to my heart, and as in my last assignment as commissioner, I have written a letter to the board through Chief Commissioner, and that letter is titled Roadmap to Minimize Frivolous Litigations. This
All
is,
yours,
this
please.
is an official letter written to the board.
now I want to hear that.
Yes. So, my take is that 3-4 things are the first and foremost. First, we have to make our legislations simple. What is happening, I am observing right from 1994, when the service tax was introduced, and I was in the field as assistant or deputy commissioner at that time. And many people who were in the board and in the TRU, and when the clarifications were coming from the board, I used to virtually fight with them that what kind of terminology you are using in this notification. You are making only the life of an advocate brighter. But this whole sort of, because they are prone to many interpretations. So this has been going on since at that time. Now I will summarize that. First, our legislation should be simple, plain worded. There should not be a scope of differing interpretation. Number one. Number two, even if you come out with a very good legislation, there is still discretions at various levels. There is a fundamental difficulty that in our law, in Indian jurisprudence, the adjudicating authorities, who are the quasi-judicial authorities, right from assistant commissioner to up to, in many cases, commissioners have to pass orders. So the presumption is that board or the parent body, the organization, cannot direct a quasi-judicial authority to pass an order on any question of law in a particular way. It is every adjudicating authority in the field to take his own interpretation. If you go by the advanced ruling authority's orders, sometimes you will, as a lawyer, you will like to break your head. You will say, what sort of orders are being given? In one order, the gentleman passed an order saying that the activity of this, we have along the coastal area, you have to do afforestation of those habitats which are for the, for the birds and natural mangroves. So mangroves forestation, the question was that whether mangroves forestation comes under agriculture or not. The kind of logic which was given, laughable. So what is happening that every authority has his own interpretations, and that is leading every question goes, finally ends mostly at the Supreme Court level. So as my other co-panelists have said, that uniformity in the interpretation of tax laws, that is very important. First is that drafting of law should be simple. Second, that too much of discretion at every level. There should be some uniform guidelines coming from the GST Council or the board on all those vexatious issues. In fact, recently our board had to come out with a clarification instruction in March saying that disputes arising out of audit observations should be only referred to the board, because every formation has its own interpretation. Even in the same city, like in Mumbai, there are 11 commissioners of GST, including the audit commissioners, and one person is taking one view on an issue, another person is taking a different view on the issue. So even in the same city, we are not able to...
No, sir, I want you to give me the suggestions. Problem we know. These problems we know. I want solutions.
Yes. So first is drafting of laws should be simple. Second, the officers at decision-making level should be properly motivated or tuned to take a decision.
Third,
and third is, as you very well said, that this time, like you pointed out, in long back in Britishers period, some law was there probably where it was only 3
You were
months.
not born then, no? You did not know. 3 years time, 3 months time.
Now it is 3 years. And now if there is a
What is
suppression
fourth
of
one,
tax,
sir?
5
Because
years.
now 1 minute only. So what is the fourth one?
Fourth one is, of course, that simplification of tax laws. As first I said that there should be simply drafted. Fourth, you have given me very little time, so I am being my senior, I am leaving up to you to give the answer.
Oh,
Sir, if you allow 1 point, sir.
yes, sir.
Sir, as rightly said by all the panelists also, it's an evolving subject. There are, changes are very frequent. There are many circulars and orders are, very recent one. The interpretation becomes very difficult because many of the officers in 2024 circular also, they put it into retrospective of 2008, 18 and etc. So training is very important and all should be at the level playing field.
Thank you. I only thought to tell one thing. When lawyers are given the stage to talk, they don't know when to stop. I want to make a change. I got 11 seconds to finish. So therefore, I say for the first time in my life, I am closing the meeting exactly at 0 hours, which have been allotted to me. Thanks to all of you. Good luck.
Wow, quite a conversation we had on this panel. Ladies and gentlemen, can we please, okay, all our panelists and for our wonderful moderator, Shri V. Lakshmi Kumaran, I request Mr. Lakshmi Kumaran, sir, please stay here. I'd also request our panelists to stay here. We have a small token of respect for all of you. Can we please get the plants on stage? And as we'd like to thank our panelists, I'll request Mr. V. Lakshmi Kumaran to present plants as a token of our respect to our panelists. In fact, Mr. Shailendra Kumar. Thank you once again, ladies and gentlemen. Can you please hear it loud? Through same panel, we had discussed the problems as well as solutions. Indeed, one fruitful panel discussion we had. And now I'll request all of you to please come together for a group photo as we get ready for the next technical session. And say TIOL.